Hi, I'm Michael Kaloshi, and welcome to our annual Developer Trends podcast. I'm joined here again with Michael Matusik, one of Australia's leading market analysts. Michael, welcome.
Thank you. I don't know about leading, but I'm one of them.
Yeah, you've had a lot of history and worked in a lot of markets, so and relied on by a lot of developers. So nice to have you joining us again this year. This year we're going to cover off rising costs to build new top-end apartments, what's happening across the Gold Coast and beachside suburbs, up-to-date housing development trends, plus the impact of the light rail and Gold Coast Airport upgrades to the Gold Coast. So
yes. Lots of stuff to cover, and all of it's positive news if you own something.
Yeah, definitely. And look, the market has obviously gone from strength to strength over this past 12 months. We've seen southern states that have probably suffered a little bit by cost of living increases and interest rate trends, but the Gold Coast, Southeast Queensland have buoyed pretty well. Still tying that back to net migration and obviously the construction landscape.
Yes, very much so. Well, there's a distinct movement from interstate, particularly on the Gold Coast point of view, from Sydney, Melbourne, and increasingly Canberra. There's overseas migration, and increasingly the Gold Coast is attracting a lot of that overseas migration. I think it's about 20% of the intake now across Queensland.
Yeah, we sat at 25% for Queensland last year.
Yeah, in terms of and then but Gold Coast of that share is increasing in the overseas intake, and so that's adding pressure, and they bring They look at the Gold Coast quite differently from a local market, even from interstate, but also overseas. You know, for argument's sake, if you speak to somebody who's coming from China, they can't live near a beach. They can't live near a beach of this quality or the facilities. And so their prices, there's an issue because they can shop around, but it's not like, oh, I'm not paying that for an apartment. It's like, which apartment am I going to buy?
Yep.
So they're all adding to the price. And the positiveness of the market. The other thing that's a problem in terms of delivering stock, but it's one thing that's a flaw under the market, and I don't think this is going to go away, is the lack of supply and the building environment, the cost to build, the lack of trades. I mean, even since COVID, the number of people in construction that can build an apartment, particularly a tier 1 or 2 type builder, there are actually 8% less of them in Southeast Queensland than it was before COVID. And that's because a lot of the businesses that they were in went broke because they had fixed price contracts and all that type of stuff, and the prices rose, particularly after COVID in terms of building materials. But also a lot of them just left the industry because before COVID, I think the average age of the builder in Queensland was something like 48 or 50, and they just said, I've had enough of this, I'm leaving. So
I think on the flip side of that,
pressure.
I've seen a lot of the builders that felt the risk sat too heavily with them pre-COVID. They experienced some significant losses as a result. A lot of them, as you said, failed and went insolvent and wound up a lot of builders in all sectors, from house and land to high-rise markets. So now we're seeing a bit of a trend that's come in where builders are now developers, and there's some major funders across the country that are throwing money at them, and in some cases 100% funding them just to get their capital out the door because of the traditional developer model is not working, and without a fixed price build or a commercial fixed price build, it's making it extremely difficult for most of those to operate.
Agreed. One of the things that's interesting in this market is that, and of recent times, is that there's capital that needs to find a home, and it's attracted, and hence banks are lending this money, and other ways to gather finance to the development industry, which, you know, having done this for some time, and yourself as well, that's kind of rare. You kind of like, you know, you'd think that somebody would put in, you know, a couple of $1 million and several of them into a development, thinking like, you know, well, this should work. But today that money is there, and agreed 100% in terms of many builders carry too much of the risk versus the developer go, okay, it's not working, I'm walking away, but hang on, you know, we're halfway through it or whatever. So, and yes, there is a trend And I think the more successful projects, or the ones that happen faster, are the owner-builder combo. There's still obviously developers who have to find a builder, but those that have a combo and all under one roof, my experience is that they are the ones. More of those projects happen.
Yeah, if they're vertically integrated, they're the ones that are obviously doing the most business at the moment and doing extremely well at it. I'm seeing a trend now with a lot of builders coming in and seeing me with sites being thrown to them. They've been told that they have funders that will give them 100% just to get their capital out, and then they're relying on us to obviously price them up. And to some extent, a lot of these builders have always priced what's been put in front of them, and unless they are vertically integrated and they have been doing it for some time and acting on both sides of the fence, they're probably. Well, I know they are definitely needing advice around what the market needs, what type of product to deliver, what level of finish, level of amenity, car parking ratios, functionality and designs, and so we're finding increasingly that we're sort of leaning in on that just to ensure that we're steering them to sites that we can obviously sell the product and that what's being delivered meets the demand. So it's one thing to have an undersupply, but it's also another to ensure that to maximise yield, you're delivering something that the market wants.
Or maximise return.
Yep.
Yeah, so often it's not the number, it's the return to the developer and so forth. One of the key things there when you're giving project advice, and I'm sure you'd like the people that are coming to you to come to you earlier and also not to come to you with a problem. Sometimes they do. This is not selling. This is the designs. These are the price points. We've spent X on marketing. Help us. And often it's like, well, you can drop the price, which makes it, marginal in terms of return. But it would have been really good if you spoke to us before you actually got some designs and we actually drew what the market wanted and reconfigured it and so forth. I mean, often things are just orientated the wrong way.
Yep.
The car parking's wrong. The internal space is 15-20% of it's just wasted space. People aren't going to pay. Well, if they aren't going to pay $20,000 a metre internal for corridors that don't do anything. And so you have to discount that product and so forth.
Yeah, it's just finding functionality in all these designs and making sure that they meet what market demand is. And
so for the developers listening out there or people that have site, need to come to these guys early, not late.
And I've got a meeting this afternoon with one that's already launched and been live for a while and struggled to sell. And it's more so around the design. And I had a look at it. I spent 10, 20 minutes on it and identified a whole heap of things that should have been done differently, that I can understand why the market's pushing back and why they might be comparing two sites side by side or in close proximity in square metre rates that are being achieved and sales that are being done there and going, well, why aren't we selling? But they can be a functionality issue or they just missed the mark on design. So it's...
some of that, and I think in this case, what you're talking about is also how it's branded, how it's designed, not so much how it's branded, how it's actually marketed, and the emphasis on certain things rather than the things that matter to the buying market.
Yep.
Like it's the design, it's the price, yes, all those things, finish, level of finish and so forth, but it's also who's going to deliver the project, who's the builder, what track record do they have, is it going to actually be completed?
And understanding the offering compared to most of the other products. So a lot of people will look at a square metre rate and assume that as long as we're in line with that, but without understanding all of the additional extras that are going into the top end market, some of these things are really specced up, and that's the reason why we're hitting the numbers that we're hitting. Some of them have the right level of amenity where others don't. Some of them have challenges with car parking ratios and traffic management systems and all sorts of things, or car lifts, and so all of that needs to be considered when you're looking at a site. The amount of people that tend to put sites in front of me these days and say, well, I've got a 1,000 square metre penthouse and so I want $25 million for it, but the quality of the building is not something that I believe a purchaser is going to want to pay $25 million regardless of how big it is, because they don't want to be in they want to be in a like development where the majority of the product in there is of a certain standard and the calibre amenities also resonates. So yeah, interesting. But we're starting to see now a lot more sales transpiring. There's a lot more depth in that $22,000 to $25,000 a square metre for your beachside, beachfront product. We've been cracking now late 20s, so 27, 28, 29,000 a metre for established and new product through...
This obviously is a sales price.
Through certain areas. So there's been some really strong uplift and growth through those markets, whether they be main beach, surface to some extent now. It's had some really strong prices, nearly topping the 30 grand a metre. And then obviously some of the resale stock that's between Broadbeach, Mermaid, and then even southern end of the coast is performing quite well. So it all leans on an undersupply. So.
Yeah, and that what I like to call the golden 11. So these suburbs that are, from Main Beach down to the airport near the beach, they're actually, again, very tight in terms of supply. Very hard to produce new supply. Obviously, there will be increased supply, but often it takes amalgamation of house blocks. Some areas it can't happen. And also, even motels and so forth are now being knocked down to be redeveloped. More of those are closer to the highway and probably won't attract that 25 to 30 grand a metre, but there won't be anything like the $3,000 to $5,000 a square metre that used to be the case 25 years ago. And just think about that for people listening. It used to be quite normal to price for sale, not far from, or even in these precincts that you're operating in, at the $3,500 to $5,000 a square metre. It's now $25,000, $30,000.
So how soon do you think we're going to see a change in the construction risk and environment there? Obviously got the Olympics coming up. We've got tier one builders that have been seconded for a lot of government infrastructure projects that are being paid extremely well to do that, which is ultimately increasing the cost of labour and making a lot of these things unsustainable.
Not available to do other things.
So is that likely to normalise for people listening in? I've got my views and opinions, but from your perspective?
Not in South East Queensland, it's not going to change. With the work we've done recently, and I think it's going to be in a document that you're going to put out pretty soon, would suggest that you're likely to continuing to see 5% per annum increase in the build costs from for now at least till the Olympics. So, we've got 7 years of that coming through. Now, it might be 3% one year and 6% the other, but on average, something like that. Other markets, it's dropped or it's slowed down. Melbourne's a good example. But it hasn't fallen through the floor. It's just, it's gone back a little bit, 2 or 3%. Now it's flatlining. So the build costs are stuck. They're very hard to get them down. But in South East Queensland, particularly in the Gold Coast, and particularly for boutique product, because it's not just the price, the builder shortage, it's the product that you're bringing from overseas. A lot of it is shipped overseas. Tariffs haven't even kicked in yet, so that's going to have another boost. You've got to have X contingencies, often to get finance. That's part of that money getting 100%, but there is some factors into how the build thing is done. So I can't see it changing in the next 5 to 7 years. We're still going to have pressure on price. If I was a betting man, and I'd be saying to a developer, you have a minimum of 5% increase in your build costs.
Year on year.
Year on year.
Yeah, look, I'm sort of seeing the same thing across the market at the moment. So our view is that won't change until about 2032 once the Olympics are out of the way, all that infrastructure is delivered, and then we get back to a little bit of a normalised market. Obviously, for those that are in the construction environment there that have got experience, we're seeing that the Gold Coast, but also Australia generally, is probably one of the most inefficient construction landscapes in the world. And I just recently got back from a trip to Dubai, and it was just amazing to see the scale that they were building at and how quickly they were doing things. And yet you see the challenges on job sites here, where everything goes so slow. And it's I know obviously there's now some inquiries that are coming out into that. I don't know if it's going to change things, but hopefully it does, because from what most people probably don't appreciate is that if these costs are driven so high, developments become unsustainable and it actually puts them out of work. So it's finding that balance and equilibrium between protecting the employees and creating something that is commercial and feasible for developers to take the risk to deliver this product. And at the moment, we're seeing a lot of challenges there, that job sites that are so slow that are being held up unnecessarily, and it's frustrating. And I see the financing costs that are hitting developers, and no wonder they're putting a lot of them to the wall. And so it's interesting. Do you have any thoughts on that? Or
Well, having been to Dubai for about a week late last year, normally when we go to Europe, we normally stop in Dubai in the airport. And I said to my wife, we've done this a half a dozen times in the last, decade. Let's just stay for a while. And I'd never stayed before. And I was amazed, what was there. Yes, and it's a different economy and it's different employment structure and so forth. But what they can build, the quality they can build, and so forth, in comparison, is chalk and cheese. I don't necessarily think that, therefore we should be like Dubai. We're not saying that. It's just that when there's some things are removed from the construction landscape, things can happen a lot quicker.
likewise with councils and regulations.
It's the amount of documentation, the regulations.
A lot of red tape.
Yeah, the sustainability stuff that now has to be ticked off. Now, you could argue that might be a good thing, but a lot of it's just nonsense, if you ask me. The end result of that is, if you went back 10, 15 years ago, it took about 2 years, sometimes a little bit less, but on average about two and a bit years to deliver a boutique thing on the Gold Coast, 30, 40 apartments. It's now close to 4 years. And I think it'll expand to 5 during this window that we're talking about in terms of price growth or construction price increases and so forth. And so
we talk about a housing crisis, though, and the biggest challenge and thing that's driving the cost of construction up and the cost of prices and essentially established homes is, one, lack of supply, but two, the additional funding costs that are having to be factored into these things because they're taking so long to get off the ground, so long to build.
And taxes and charges.
Yep.
It's 40+%.
Yep.
Now, it's always been, I think, too high, but it's gone from 25% in early 2000s to now close to 45%, 45%, depending on what type of properties. That's a lot. One could argue, okay, well, that's maybe fair, but the end buyer is paying for it. And that slows down the rate of sale and everything else. But the way that we build things, the fact that you have to close everything and have X people do this and Y just to move something down the road, some of the major builders will tell me that, that is some of the worst stuff, that is now taking us weeks to get something into a site over where it really could be just done in 6 hours. Just close the street down, do it on the weekend. Well, we have to change this, we have to do this, we can't do it at the night because we're upsetting residents, blah, 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 blah. So all those things are adding to it. And they're not going to go, unfortunately, yes, we can have meetings and sessions from federal government and all the rest of it. I don't think any of that's going to change.
Yeah, but I think there's got to be some common sense as well. You only need to try and make your way from Broadbeach to Kira and see the 20 people standing around watching 2 people work on a light rail site and wonder why these things are costing so much and blowing taxpayers' budgets and enormous wastage. But that's another conversation. So
it's what I call the baker's dozen. So there's usually 13.
Yep.
One of them's working, the lady, and the 12 guys are watching.
Yep.
I know it's a bit harsh, but that's who it's somewhat true. Just go drive around and have a look.
Yeah, and look, I think if we can get more efficiencies in these things, it's not going to stop the work for people. It's just going to make sure that the economy flows better. The impact to businesses on light rails and all those things are considerable. So you go to countries like Japan and China and you see how quickly they move through some of this stuff. So there's got to be lessons there, and people that are obviously a lot smarter than myself sitting at a government level that should be looking at these and figuring out how they can affect change and not just buy votes or worry about staying in power, but sit down and actually lobby proper change to enhance productivity. So we're seeing it now as well. Like, I've had numerous conversations around how I feel we should be looking to fix some of the housing crisis. And I think we need to be encouraging and incentivising private enterprise to deliver the housing need and demand that we need, and that needs to be through a lot of incentives, whether it's zero stamp duty on sites that they buy, providing that they build within a certain time frame and that they don't sell that product for at least 10 years. Land tax concessions on those, so if they hold them for 10 years and they have their rents in line with market and allow people to live there long term, that they get land tax concessions, things that stop the federal government having to try and deliver these things where they're getting raped and pillaged and paying overs and not being able to keep an eye on it. You could have private enterprise doing it, holding it, building it, super funds, whatever it is, and in the same way they do it in the States where people rent most of their life. But there's got to be incentives for people to do it.
And there needs to be looking at exactly, and what some of the things you suggested are good ones, good things, and there's looking at the problem differently. By argument's sake, I had a meeting in Brisbane yesterday with the council about changing things and improving things. I've done that with the Gold Coast City Council too. And you suggest some new housing forms, maybe not at the top end of the market, but suggest some new housing forms, and it comes in the conversation with the planning staff that, but that we'll have a problem with refuge collection. And I go, okay, change the way you collect rubbish.
Yeah.
Don't say it's a problem, because the truck won't be able to turn around and think. Just change. Go to Europe and see what they do with their rubbish. They put it in a collective bin out down the end of the street. You put your rubbish out when you need to. So once a week or 5 times a week, if those bins are filled, they get collected, but people can walk down the street. How hard is it? Oh, and what about the composting stuff? Put incinerators in, or have some business set up that the compost is collected and is used in some urban farm somewhere, and they contribute $10 a week or a month or whatever to be part of this urban farm. Can we think about it differently rather than say we can't do that because we can't collect the rubbish?
Yep. And I think probably our biggest problem at the moment is there's too many handouts going out in order to try and help people into the market rather than figuring out.
It always adds to the inflation.
It does. So how do we create more supply? And in order to do that, you need to incentivise those that have the capacity to deliver it, and hopefully put certain things there that will keep those assets in market as permanent rentals for 10 years, 20 years, and they hold them long term. So,
and often it's not big things. It's small stuff, setbacks, open space expectations. Okay, well, you want X open space. Can it be on a rooftop? It doesn't have to. The residents don't have to have it contribute to the park down there because they've got a roof.
Yep.
Range of things like that. The refuge collection I've used as an example. It doesn't have to be wholesale changes. Some of it's just height. So, the council down here, because of light rail, I don't know why, but just because of the light rail, but, we're going to, in some locations, we're going to boost by 2 to 4 stories height. Okay, that's good. Now, height's an issue because, at a certain level, you've got to up your construction regulations and so forth. But if it stays under that 8 stories and, then somebody will say, there'll be a pushback from the local community. Well, maybe, but they're living in an area where now they've got light rail and then now they've got a station that's 500 metres away from them. What did they expect was going to happen? They got the benefit of the infrastructure, which they're not really paying. I mean, rates, but not by much. The new developer has to pay for it because they have to put development contributions in there. So they'll have to expect that there's going to be more density. But adding 2 to 4 stories makes a big difference to the return to the developer. It doesn't really impact light and shade and the local impact. In fact, you could argue it adds to the local impact because there'll be more people in the coffee shop, so they might actually put more staff on. In fact, there might be the second coffee shop, and so on and so forth.
Yep. So, Michael, what's happening across all of the beachside suburbs? I know we briefly spoke about that before. What do you think the trend is going to be for all of these beachside suburbs from Main Beach down to Coolangatta?
Well, one thing that's definitely happening, particularly in that southern stretch of this beachside area, is that light rail stage 3 is underway. I think I read yesterday or the day before the stage 4 has been announced. Was that in the local paper the other day? I think it might have been. There was conversation about the airport and stage 4 and so forth. But stage 3 is definitely underway. I think that's 8 new stations down to Burleigh and I forget exactly where, but say 8 new stations and Broadbeach to Burleigh or something like that. So that's going to have an impact, particularly in and around those stations. The airport's been a big thing. upgrade. I think it's called Project Lift. That's actually been a big thing. I occasionally use the airport now. Never did before. Used to drive from Brisbane down, or when we live overseas interstate now. But when I travelled up until recently, I've been flying in and out of the Gold Coast far easier.
It's a great airport now.
And it can take you can fly overseas quite easily. And so forth. So those things, and it's been an increase in employment and an expectation. I think there's 10 million passengers a year through, or something like that, through that airport at the moment. So that's it's a big number. So those type of infrastructure projects have driven development increases. I mean, again, I mentioned earlier that hotels and so forth are being snapped up. Anybody who's within 400 or 500 metres of the new stations will. If a real estate agent has knocked on your door and said, I think this is a development site, then I'd be surprised. Not everything's going to happen and not everything's going to work, of course. So that type of thing's there. And one of the interesting trends is that if you looked at where people have moved from, particularly from interstate to those beachside suburbs, something like 10-15% of the people who moved there in the last year have come from interstate. Now, they haven't just crossed the border from northern New South Wales. They've come from Sydney, Melbourne. Some of them obviously have crossed the border locally, but they've come from Sydney, Melbourne, Canberra's and the like. And I think it's something like 25-30% over the last 5 years. So these areas have been cherry-picked by people who can work beachside, so to speak, or live beachside, but can work on Sydney wages. And with the airport, they can go back. They have to go back to meetings for 2 days. They go back to Sydney, and they actually would rather live here. And instead of paying, $10 million to live in something in Bondi or whatever, they're paying 6 or 7 here, and it's nothing wrong with Bondi, but they think it's better. So it's those type of trends that are definitely happening here, and the evidence is in the ground. And that one thing that makes, because that's kind of like bolted on now, I don't think because one thing you could say about the Gold Coast in the past, it's been quite cyclical. It's been of a size that didn't allow the swings and roundabouts, so forth. You're now at a bigger size. It'll be a million people, residents somewhere in the next 15 or so years. So it's nearly just shy of
2038. It's pretty
something like that. I think it'll be sooner than that. If they can provide the housing, it'll be sooner than that. But it's coming. There's 10 million passengers through that airport. There's a lot of tourism and so forth. But one of the things that makes it more a stable market is the fact that you've got X number of people coming from wealth areas, and they're actually a high percentage now. And I think as the world is an uncertain place, I don't see that changing anywhere. Places like the Gold Coast hit a lot of spots. Ticked a lot of boxes.
Yeah, we're also seeing now that ageing population who are accessing their super. They've moved into retirement. They're coming out of capital cities. They're either buying a secondary home here and living between here and Melbourne, Sydney, Kiwis as well. So you're starting to see a lot more of that net migration coming up here, and they're cash buyers, and they're looking for quality homes, and they're seeing value because although our apartment prices at 25 to 30,000 a square metre might seem like they've increased considerably, they're still a long way from some of the $100,000 to $150,000 a square metre in Sydney. And so it allows people to get a more generous sized apartment with better level of amenities at an affordable price in a good location with a great climate and a good lifestyle.
And less hassle. I mean, if you say to somebody in Sydney, you live in the North Shore and you've got to get to the CBD. They go, Christ. But if you say, okay, you live 15-minute drive from the Gold Coast Airport and you catch a plane, and then you can go to your 5 meetings in town, stay overnight in CBD and catch a train back and come here. And it's all that's better. Because I'm one of those people, I live on my farm now south of Hobart in Tassie, and no hassle at all. But to drive around southeast Queensland or Melbourne or Sydney, it's shocking. I'd rather come down here, fly down. I'm pointing to the Gold Coast Airport. Do that, catch a cab or Uber, and go to the meetings and do what I have to do and go back. And it's a lot less hassle. There's a lot less stress on you, and I think and if you've got the money and the time to do that, these people are doing that for sure. And one of the things as well is, you've seen some substantial price growth, and I was a betting man. I would say, again, lots of caveats on it, this is my opinion, not advice, that you'd probably see these beachside southern suburbs probably go up 2 to 3% more per annum in price growth than, say, the generic Gold Coast. I think this the southern end of the coast that's going to be the star.
When you look at the demand and amenity, some of those markets like Nobby's is a classic example down there where Daniel Veach from DanCav has gone in and redone that whole precinct with the Oxley and what that's done to asset values in the area. He fought for many years to get approvals there to put something in that would have added a lot of amenity to there, and most people resisted it and pushed back. But I can say, as someone who works that local market very heavily, that all of that's gone in there, the quality of the restaurants, the lifestyle, has significantly underpinned demand for properties in that location, and we're seeing that in different pockets. Starting to happen in Palm Beach, it's happening down the southern end of the coast, and then you're seeing these vertical communities that are being built with really high-end quality product, as well as that mid-tier market as well. So it's interesting the level of investment and how those suburbs are starting to shape,
to gentrify and be reinvigorate. Again, you mentioned my wife before, been married a long time, so on and forth. If I say to her, until recently, she hadn't been to the Gold Coast for a long time. And I said, look, I've got to go to the Gold Coast for work. Why don't you come with? She goes, why would I go to the Gold Coast for? It's horrible. I said, just come with me. And she was like blown away about the quality of the restaurant, the amenity, it helps when it's a very nice day and days and all that type of thing, which often is winter. Lovely day today. But she was like, wow, this is like, God, it's improved. And I think a lot of people, they still visage the Gold Coast, and some locals as well, they either don't use it or they always look for the negative. But if people are from Sydney, Melbourne or overseas and they haven't been here for 10 plus years, when they come here, I think it's like, and I can understand why when they come here and they've had a good experience, they're knocking on your door saying, we're interested in buying this.
And look, the city's definitely matured, and I think from council's perspective, it'd be nice to see. I know there's a housing crisis we're trying to tackle, but there's also got to be a bit of a master planning overview on the market. And so like me personally, I've been here now since 1992. I came up here to boarding school, and it's changed so much in that 33 years. But I look across the market and I see some of the amazing developments that have been delivered in commercial and retail precincts, and how it's grown, and we've got everything from the Ocean Way in certain parts of the market, but then I look at some of the things now where they've taken away the shadow rules, and I see a building jammed right in front of another one that destroys and decimates the view corridors of another building, halves the value of the existing established product in order for a developer to put another building up right in front of it just to obviously make some more money. And I think there's got to be a bit of a view on those things, a bit of a first mover advantage, increased density, have the setbacks at certain levels, but we obviously don't want to become a concrete jungle, but we do want to make sure that we're delivering the right product, and that the way the skyline is shaped is something that we're all going to be proud of, in my opinion. So, and there's a balance there. So.
I agree. The point I was going to respond to that was it needs to be a balance.
Yep.
And yes, and in early you need to get some advantages over coming in late. Often, yes, you often pay a premium in terms of coming in late in terms of sites, but there's a risk when you go in first, and you need to get an upside.
Yeah, you're always pioneering when you come in first.
A lot of pioneers get shot in the back, and you want to try and cover that as best you can. The other thing as well is, I walked along the beach this morning and so forth, and how quickly they've replaced the sand and replaced the damage, and that's going to happen. I don't think it's, I'm not going to say climate change is going to make it worse, because for what it's worth, I think the climate's always changing and all the rest of it. But the fact that they fixed it quickly, they have the capacity to do it, they have the access, they've designed that into the thing. I think that's all good stuff.
Yeah, it's interesting. I watched an article recently around all the seawalls, and they were saying that they couldn't bring them any further forward because of beach erosion. But from an engineering perspective, it would make sense if they did actually bring them forward and tapered them down, so that we didn't have these massive drop-offs that are almost like a cliff face. So it was just a gradual run all the way down to, or at least another 40, 50 metres that would hopefully protect them.
There's a lot of tech about how to do a lot of things, and one of them to actually stop coastal erosion. It's not only the height and the not that I'm pretending to be an engineer, but again, the thing I watched recently might have been the same type of thing, where it's the shape of the revetment wall, it's where it's placed, and those type of things. Yes, they cost money, but you need to protect. You're going to protect the assets that are here, because they're billions of dollars worth of the assets.
And the beaches here are one of the biggest draw cards. So,
Correct.
But to their credit, they have had the ship out there pumping sand back and doing everything they can to restore the beaches after Cyclone Alfred. So it's good to see the council behind that, and with such a level of investment.
Okay, so that's the point.
So, Michael, obviously we've had a pretty in-depth conversation around different developer trends and markets there, but if you're a developer looking to either expand in the Gold Coast market or come here from Brisbane or interstate, what advice have you got for them over the course of the next sort of 5, 6, 7 years?
Well, my advice, not even time related, first is that seek advice early. So come to you guys first, and early. Don't say, I bought the site, I bought this DA and can you help me? If you've done that, expect when they come to you that there's going to be some changes. You might have to go reapply, you might have to change something and so forth, because you guys are on the here every day, you're seeing it every day. It might seem like small things, but it will make a big difference. Marketing, price points, designs, layouts, so on and so forth.
So that's anyone can make a spreadsheet work and spit out a return that they want to see. But
and also be careful of what you've been told. You know, often an architect's job is to mass the site so the site can be sold at the highest price, because it's sold per unit or per dwelling. Be careful that might not be the best value, best solution, and there might be better sites as well, because you provide that service as well. The other thing as well is that you need to factor in that 5%. You need to lock in your builder and trades early, if you're not a builder developer, you're going to have to really get one advice on who, and then actually have many conversations with those guys to get those people secured, because it's still a driver in this market. Who's going to build it? Architecture it's increasing in terms of who's the architect, but it's not still as high as who's going to deliver this stock. And the other thing as well is that you're going to also get a lot of materials from overseas, whether not they're bench tops or whatever, and that takes time. And so you're going to say, okay, we might have to pre-order that. And you might expect, who knows what's happening in the world, Trump, but they're probably going to go up in price. So you're going to have a contingency of all those type of things. But what I like, and I give project advice quite a bit as well as part of my mainstream of work, is that the earlier a developer comes to somebody like myself or yourselves and says, I'm looking at this site, not I've got this site, can you sell it? Yes, you'll talk to them about it and you'll review it, and if it works and you can they agree to certain things, you'll sell it for them. But it's best the earlier the better, because you can shape what the market wants. And then you can find them their next site.
Yep, definitely. And I think when I look back at a lot of the developers that we work with on a regular basis, there's some that are just doing a really good job at creating these vertical communities, the amenity they're bringing there, which is supporting future growth for potential purchasers, the lifestyle component. Mosaic do that extremely well. Obedient & Co are doing some outstanding developments. Their new Greenmount one that they've just launched with the level of amenity through there. The Samet Group that have come up from Sydney that are doing Coast. So we're starting to see a lot of these sort of higher end developments that are coming through, but with so much amenity and done to really support that lifestyle, so that residents don't really have to go anywhere else. I'm working with the developers of Nalu, which is the new site at Miami, and we'll be launching that later this year. And we've been involved from the very start. We've sat in design meetings with both the architects and the interiors people who we helped appoint. We've worked very closely with them on everything from functionality design, the level of amenity, the number of apartments, ceiling heights, car parking ratios, right down to the detail and the finishes, just to make sure that collectively all stakeholders are aligned to make sure that you deliver the best product for the market. And so that'll be an exciting one to roll out. But we're seeing a lot more of these. Daniel Veach, another one that's doing a lot of product in market, and most of them come and sit down with us these days, and they've got years and years and years of experience and done billions and billions of dollars worth of projects, some of them, but they're still not too proud to actually say, hey, we're launching this, what do you think, before they go.
Let me tell you, that's why they've done billions and billions
exactly.
worth of projects. Yep. And they also take the no idea is a bad idea.
Yep.
And they also take what I call the slower path. They're not like, oh, come on, we need to get this done now. The market's we're going to miss the market, or all those type of things. They set the market.
Yep.
They set the tone.
Oh, same with Macris Group. We've been doing a lot of work with them on Marina Mirage, what they're planning there. And I know they're talking to a lot of different agencies and agents to get feedback, but they've been really listening to what the market wants in order to make sure they deliver the right product.
And there's no point you saying, we'll sell it in 6 months and you'll get, X price point, knowing damn well that, you won't bait and switch and that's not your operation, but knowing damn well that it's a punt, you'd say, look, we'd rather not do this. One, we're wasting time and energy, your time and energy. Secondly, let's set the project correct.
Yeah, then you have a long-term relationship and everyone wins. So,
and and more importantly, so do the buyers.
Yep.
Because they're getting a better product. And if that culture is in the development and the delivery team, then, because when buyers are buying and they've got 2, 3, 4 years between signing a piece of paper and settlement, they'll need their hands held variety of times. There's a timing when they have to sell their property. It's one of the attractions of buying off the plan, because they actually can have time to organise their affairs and so forth. But they also want the development to happen. There's a lot of things out in the Gold Coast at the moment where, you must get it all the time, where people say, I'm not paying that price point because I can buy it cheaper in that new project. And you could argue, well, that project won't happen.
Yep.
Because it can't be delivered at that price point. But why is it for sale? Well, we don't know. We're not marketing that project, but
but it's also doing a competitor analysis of all those and seeing how they stack up. For us, it's as much about the development team to know that you're working with people that can actually execute these things and have the experience.
It's execution, that's the key. And so the buyers into those projects actually, they actually get delivered. And not always exactly on time, because, those things we talked about earlier in this conversation, but the best that they can, at the price point that they purchased, the buyers purchased that property. But also, there's a process, the confidence there that it's going to happen. And if there's any hiccups, that not so much to get out of contract, but, that culture's there.
Another new trend I'm just starting to see before we wrap up is a number of developers starting to look towards holding a percentage of apartments in their buildings now, just to keep them, rent them out long term, because the capitalised annual growth rate on the coast has been so strong for so long that you look back and see the growth that the second homeowner has had when they purchased from a developer. So that's starting to emerge.
I've seen that across a variety of markets where you normally, in the past, it used to happen in Brisbane in 10, 15 years ago, where there was an oversupply, for example, and there was some oversupplies here, particularly in the cheap and cheerful market on the coast. Developers used to hold 30% just so they could pretend they sold them, and then close to settlement, release them and so forth. Now it's the opposite. It's because, we're going to make more money holding it, either to rent it out and resell into the future, or that's part of my equity, super fund, whatever it is, often equity for the next project. I own X number of these apartments, and then they're now worth, 5-10% more than they were on settlement, and it's only 18 months difference.
Yep. Michael, anything else you want to say just in closing?
No, I just think that the Gold Coast it is the 6th largest area in Australia. I think it's the 8th pulse point, economic pulse point. Pretty hard to become bigger than Adelaide. I mean, it's not the biggest, the best, but it's growing consistently. But as its pulse point, as its importance to the country, I think it's something it's going to increase. So the Gold Coast is not only a good place to live, but from my point of view, for a visit, I don't think I could afford to live here anymore. It's an area that is increasing of importance, and I'm not surprised that you're seeing particularly an increase from interstate and overseas buyers, at particularly that middle to top end of the market.
Seeing a lot more mid-rises coming into the market as well. Obviously, that's part of the construction landscape that we spoke about. So your developers that can deliver those versus the builder developers that are integrated, delivering the larger product.
It's interesting. If you looked at the approvals over the last year, there might have been 150 apartment approvals on the Gold Coast. Most of it won't happen. I think something like 45% of those were under 20 dwellings.
And when you say most of those won't happen, is that because they're delivering the wrong product for the market, or they don't have the capacity to do it? They're not consulting the right people.
For the bigger stuff, they just won't. Don't stack up.
Yep.
They got an approval, but when they run their numbers about construction and everything else, to sell 200 things in this market without ticking every box, very hard.
And that comes back to then having those conversations early with someone like ourselves or other people in market that are very close to that can sort of say, okay, well, this is the type of product you're going to need to deliver, and this is the size and the price point, and reverse engineer that so that you're starting with the end in mind to deliver the optimum product rather than maximising the sites.
When everything's going hunky-dory, in other words, prices, construction costs aren't going up, and there's even a and there's a strong demand, but the affordability isn't pushed. One in two projects on the Gold Coast happen in terms of apartments. It's now 1 in 3.
Yep.
And even at those sub 21, some of them just don't stack up. But that smaller approval number, that's more than doubled in 5 years. So that reflects the trends. It's cheaper to build, less number, quicker to turn around. Well, when good advice is tipped in and in their good locations, those projects are wanted by the market as well.
Yeah.
Hence, that's why there's an increase in them. Less body corporates, fewer people in the building, more of a community feel within that building, and so forth.
So I think in summary, we can probably wrap up and say that over the course of the next 7 years and even beyond that, capital growth within all of our property assets here are likely to perform quite well due to the undersupply and that long-term holds and staying in the property market is probably the best advice that we can give anyone. Yes. Because they will get priced out of it otherwise.
Yeah, I think that, all things being equal, there's always that caveat. I think that there's going to be some price growth continuing. That there has been some very good price growth in recent times. It's less cyclical than it was. And for those who are, I remember this REIQ poster from decades ago saying there was a man who was, turned into a fossil this was the person who waited for prices to fall. Now, I'm not necessarily saying that's exactly right, but be very, very surprised that for quality assets, in 5 years' time, they're going to be cheaper than what they are today. I think they're going to be surprisingly more.
No, and look, I guess everyone's always looked at the Gold Coast as boom bust, and that cycle was true up until about 2012. Then the market started to mature. People bought within their means. COVID came through. We ended up with a massive spike in population. So the net migration levels increased by nearly 400% during those levels or those times to take up any supply. And now we're at a point where we have an undersupply of stock. We've got a really mature market. We've got affluent people from all over the country relocating here and paying cash. You look at the 4217, 4218 postcodes, were the highest percentage of cash settlements in the country for the last 4 years. That's the entire country. So more than a third of every transaction has no mortgage. So when you look at that, the market fundamentals are stronger than they've ever been, and it makes it a good long-term place to invest. And I advise everyone to, if you're buying and selling in the same market, no problem, but don't jump out. You've got to get in, you've got to hold on, and we're going to see challenges to try and get the youth into the market here. So if you've got kids, it's a good time to start looking at how you start to set them up, especially if they're just turning 18, 20, early 20s. How do we get them into the market? That's for a different whole podcast. But
how we do that is quite different to, you know, the southern Gold Coast suburbs per se. And there's ways to do that as well. And the Gold Coast will need to listen to changing some of the ways they do that. But it's a challenge for all major urban areas as well to do that. But yeah, you mentioned quickly, from my point of view, in a concluding statement, that yes, it was very cyclical, and it was only listeners might hear that. Well, that's only stopped recently, 10 years ago, 15 years ago. It's now become a bigger market and so forth, which is 100% true. And they might say, what they're saying is nonsense. It'll go back to some cyclical thing. Keep in mind that when a market's cyclical, it's normally what I would call cheap and cheerful. It's stuff that was done, investment, spruik, fingers crossed we could sell it. We don't care about it. It's just a numbers game. We're going to build another 500 because we could sell 500 and we sell it interstate, furthest away for investment clubs and all those type of things.
Yeah, they were discretionary assets back then.
That's what drove those markets to boom and bust. This time round, that isn't happening. It's not even happening in the house and land market because it's too expensive to have.
There's a lot more depth in all those markets, and that's obviously what's underpinning the entire growth. So,
agreed 100%.
All right. Well, thank you for your time again, and everyone for listening in on our annual Developer Trends podcast, and appreciate your time as usual.
Thank you. And next time, don't come back looking fitter than you were the one time before.
Thanks a lot. Likewise.
Excellent.